back to another day with Money, Finance, Freedom, your ticket to financial freedom. Today we're going to be talking about 3 stocks on my watch list for about a 3 to 5 month span. Now these stocks are not a 3 to 5 month as far as their price target, but it's going to be the timeline of when I'm looking to invest. After that 3 to 5 months, we're going to need to be reevaluating on whether or not it's still in the buy category. Those 3 stocks are going to be in 3 separate industries. One of them is going to be in the oil industry. The other one is the opposite side of that coin in the EV industry. And the final one is a business management tool company. Now, the first one we're going to start off with is a rather unique stock right now. It's going to be Exxon Mobil. If we take a look at their graph, Exxon Mobil has been performing relatively well for all of the negative pressure on it right now. The reason I say there's a lot of negative pressure on Exxon Mobil is because not a lot of people are in their cars, not a lot of people are in planes, trains, or even boats as far as shipping freight goes. A lot of that has been halted or minimally drawn back. The one area that we have seen growth, however, is that products coming over from China have been doing exceedingly well. So that's the one area, the one little boost that we've had. Now, as far as Exxon Mobil goes, we're really looking at the long-term future of what this company can provide for us, given the fact that the EV market might be taking over in about 5 to 10 years. Now, that timeline is really important, 5 to 10 years. That means we have about 3 to 5 years where we can look at growth for Exxon Mobil. We need to watch this one like a hawk because we need to be ready for the right decisions or the wrong decisions to be made at any time. People are not going to be using EV cars at a large basis for a long time, especially not in the entire world. Now, Exxon Mobil has a little bit of a gap here to both benefit from the market that is still primarily functioning around gas, while also shifting towards a greener format. And they're actually doing just that. They do have a partnership with Fuel Cell, which is their clean carbon capture that they're going to be doing in the future. But I also want to show you what they've been doing that is a little bit unique. Now, a little bit of a history lesson here. A lot of the oil companies date back to Rockefeller. If you know American history, Rockefeller was a billion, if not trillionaire, if you do inflation, at the time because he owned so many companies and he basically had a monopoly on a lot of the industries in the American market. Now, from that, we have monopoly law, and a lot of those companies broke apart. And from that, we have companies like Exxon. Another company similar to Exxon is Chevron. And we'll see here throughout the different Yahoo Finance articles we have, is Exxon stock a buy after earnings beat and also merger talks? And we're going to see here that they had talks with Chevron about a merge. Why is this important? Well, I want to take a quick look back at my Think or Swim platform, and we're going to see a relatively unique watch list. So if we look at Market Watch, and we go to Visualize, and then we take a look at all of the different industries, we're going to notice something unique. So if we look at the S&P 500, we come down to energy, we're going to notice a relatively unique graph. Now, this is the market share that Exxon Mobil has. All of the companies in the energy sector are doing relatively well right now as we come out of the pandemic. But right down here, we have Chevron, the second largest player in the energy business right now. Now, this is oil, gas, and consumable fuels. But what we want to understand is that energy is universal. The energy industry has to compete with anybody producing an energy that can fuel the economy, basically. And that means fueling EV cars. So as more and more companies grow and become part of the quote-unquote energy industry, ExxonMobil and Chevron have the ability to join back up without confronting monopoly laws. Now again, this is a little bit of a stretch. We're not sure if it's going to be able to happen, both legally and also as far as company synchronization. Can they even do it? Is it worthwhile? Will the executives allow it to go through? So there are a lot of barriers here, but again, it's just something that we need to look into when we're looking at Exxon Mobil. Overall, Exxon Mobil is a strong company, but most importantly, the reason why people invest in it is for their dividend. You'll see it here on the Yahoo Finance page. They actually have a very large 7.6% dividend. Because of this, we don't see a large growth in the stock over time, But even with that being said, we do see this 1-year price target of about $50. I think it'll hit that. It's on trajectory to hit that. I think it'll go over that. I think it'll be about a $60 stock in 3 to 5 years, depending on the moves that they make. If the merger happens with Chevron, it could go much higher. If they don't make the right moves towards clean energy plays and put out good PR, then we could see the stock down in the actual $35 range in the future. The next stock I want to talk about is the opposite side of that coin. We're going to be talking about American Battery. American Battery Metals Corporation has been around for a short time now, and the reason that they're a relatively new company is because they're taking up a new industry. American Battery is obviously focused around metals in battery, and we're going to look up their ticker symbol ABML. Now, American Battery is going to be primarily focused on lithium batteries. They're going to try to find new ways to recycle the materials in these batteries so they can be reused, because we know that the process is not only bad for the environment to create lithium batteries, but it's also very cost inefficient. Recycling the batteries is even harder. The extraction of the materials that they need to break it up and create new batteries and create new products from the recycling is very, very difficult. Now, American Battery is one of few companies that is looking into this. There's another company called Redwood if you want to look into it, but American Battery has a little bit of an edge right now. Their edge is two things: location and personnel. Their current process is going to be uploading new Tesla employees into their company just basically by, drag and drop here. They're going to look for executives in the energy industry. They've already scalped a few players, one of them being a lithium extraction expert for Tesla that worked on their batteries and production management and product management, and they've moved him over into their company. I don't have a name for you yet, as the details are still coming out. We also have a location, which I mentioned. They're opening up a new factory. Guess where? Right next to the Gigafactory. So right next to the Tesla Gigafactory, where they're going to not only be able to converge with Tesla, talk about ideas and get information from them, talk to their employees, they're going to be able to synchronize with Tesla. Now you might be saying, well, why would Tesla do that? Why would they help another company and not do it themselves? Tesla has too many other projects to be worrying about recycling batteries. Tesla would much rather create an implantable battery in their car, so one that you can take out and put back in, because right now, Tesla cars, if your battery's fried, there's not much that they can do. You basically need to get a new car at that point. Luckily, there is some longevity in their lithium batteries, so they're not worried about that too much right now. But like I said, the recycling of those batteries is where ABML is going to come in. Now, they're also focused on mining and extraction of lithium to help create batteries. So they're really full picture here, and they're going to ride the wave of the EV market. There's not a lot of news coming out about them right now, but we will see them grow over time as a company. They are small. We're going to see here that they are a penny stock. So they're only $3 for the buy-in. This is relatively low risk for us based on the amount of money we put in. We know penny stocks are high risk, but if we can get into a company for $3 to $10, we understand that that's the maximum we can lose. And as you've seen, we have a relatively good trend here. We have these little spikes early on. Press comes out. We're going to see a good spike, little drawback, good spike, little drawback, good spike. This is what we want to see with a good company. It's not coming crashing down after a few weeks. It's staying high. And by high, I mean that we've seen over a 200% increase in this stock. Now, I can't say that I've got in early, but I did get into this company. I do hold a position. Every time I say that, I like to take a stop and let you guys know that this is not financial advice. This is personally my opinion. Do your own research. This is a great company, but there are a few other battery recycling plants that are going to be popping up across the nation as the EV market grows and as the Biden administration subsidizes that process. The final stock is a huge company right now. It has gotten amazing growth over the past, 9 months to a year, but even before that, they were performing really, really well. Now, why did they do well over the past 9 months to a year? Because of COVID. Now, we're going to see Salesforce right here. The first thing I'm going to do is show us the Yahoo Finance page for two reasons. One, I want to show you that the overall price of this stock is $234. So you're going to need a pretty hefty amount of money if you want to just start your position in this company. That's not just pocket change for all of us. And we're going to see a few more things. One, they have great short-term and long-term uptrends. We're going to see a price target of $274, and that's relatively high. And usually with Yahoo Finance, they're relatively conservative on their 1-year price target. And for them, this is conservative. And the reason being is because Salesforce is such a great company. For those of you that don't know what Salesforce is, they actually are a CRM, and that's why their ticker symbol is CRM. It's a customer relations management software, and they're allowed to integrate with a lot of other softwares. So it'd almost be like if you had the Apple iPhone, and people create apps for Apple. You then use their apps on your iPhone. Salesforce works the same way. Salesforce has a base software, and there are a lot of outside app developers that create apps that integrate with Salesforce for the business world. One of those apps was Slack, or Slack Communications. Slack is basically like the business world's version of GroupMe, WhatsApp, text messaging, and communication, all wrapped up into one for the business world. They built this app, they integrated, but then Salesforce took it one step further, and they just completely bought out Slack. This was a huge move and caused them to have great gains over the past 9 months as that merger and as that acquisition started to come about. We're going to see their overall stock trend looks fantastic for a large cap company like this. Their market cap right now is at $215 billion. They're in a great industry because they basically have unlimited growth. The more people start to open up businesses and work, and the lower they can get their price target as far as using this in small business features, we're going to see it grow over time. Salesforce is used across the world. It's used with NFL teams, NBA teams, small businesses, large businesses. And if you walk into any company that's in your downtown district, they're probably operating off either Salesforce or something very similar. And Salesforce is basically the leading or industry leader for this field, and that's something we're always looking for when we're investing, is who's leading that industry, whether it be Tesla, Google, Amazon. Who is the front runner? And right now it's Salesforce. Let's take a quick look at their chart trend. We're going to look at the past 3 years, and the reason being is not only did they perform well during COVID, but we've seen the constant uptrend of this stock just continue to rise. Now, with this meteoric rise over the last year, we have seen some drawback, and that's expected. It constantly happens with a stock like this, but it does have room to grow. We know it's a large market cap stock, so don't be too worried. I would say if this stock gets into under 230, honestly, that'd be a fantastic dip to buy in, but I don't think we're going to see it under 230, honestly, ever again. So if you can get in, if you can justify this buy, I would say go ahead and do so. I really like this. My company that I work for actually uses Salesforce. This isn't a paid promo though. It is absolutely a fantastic company, and I really do believe in it for the long term. Now, those are your 3 stocks today, guys. Remember, that's Exxon Mobil, American Battery Metal Corporation, and Salesforce. All very different industries, very different markets, and very different price points for you to buy in. We have a dividend stock, we have a penny stock, and we have basically what's turning into a blue chip stock. If you guys are worried about investing, or you haven't even started investing yet, go ahead and join Robinhood. Now, Robinhood's been in hot water lately, but trust me, it's one of the easiest apps to use. They're not going to be sued. They're not going to steal your money. They might be sued, but they're going to be fine in the long term. They're just going to get a slap on their wrist over what's been happening. I have a link down in the description to go ahead and join Robinhood. Now, I'm going to get a free stock if you join. You're going to get a free stock if you join. So go ahead and do that. Sign up, get that free stock, and start investing. I just want you to know that they were giving out Robinhood, or they were giving out Ford stocks at one point, and we know Ford's been doing fantastic. So go ahead and sign up, start investing, do something with your money, and don't just save it all the time. Save a small portion, invest a little, start dabbling in the market. Again, entirely entertainment purposes, not financial advice. All right, guys, that's it for my video today. Please like, subscribe, comment, share, all of the above so we can get more content out like this. Our videos have been doing better and better, and that's thanks to you guys. So have a great day.